Thanks for joining us for another thrilling installment of the Daily Market Wrap with obviously our resident media personality, Jack McKay. Bit of action on Wall Street overnight, the tech stocks, mate. Can you talk us through that?
Yeah, we saw the chip makers sort of had a sell-off last week over the spending concerns and whether that would actually lead to tangible earnings and revenue outcomes moving forward. That seemed to sort of, the hysteria calmed down a little bit yesterday. US markets had Friday off with Independence Day, so traders were keen to sort of jump back in and the optimism returned with the tech stocks driving the gains.
And Microsoft laying off 4,800 jobs, did that have an impact on the Nasdaq? Looks like 1,600 were from the Xbox division. Is that a sign that tech's switching between hardware and software?
Yeah, definitely. I think sort of restructuring how they deploy their employees. Obviously, it's a big portion of Microsoft's workforce, so it's about 2% that'll sort of be rolled out of there. What that sort of means is investors got to be looking at how these big AI exposed companies and what their workforce is going to be made up as. Obviously, they're at the forefront of AI. They're integrating AI probably quicker than most other companies. So how their workforce participation looks as a result of that is going to be of keen interest to investors. Obviously, wages make up one of the biggest expenses for companies. So if these big AI companies are finding ways to increase efficiency in that area, that's obviously going to mean big ramifications for their profits. In terms of the actual tangible impact on stock prices, Microsoft stock came off slightly yesterday, slipped a little bit, whereas the Nasdaq sort of was part of the tech rise and rose up, so it didn't have too much of an effect on that.
Okay, cool. And hedge funds been betting short on the yen, it looks like.
Yeah, so we've sort of been talking about the yen sporadically, talking about how the BOJ raised the rates in Japan. They've been sort of verbally supporting the yen. They did a manual intervention buying up the yen the other month. That hasn't seemed to have that much of an effect. Hedge funds are sort of taking their largest short position in nearly 20 years. So it's just putting a heap of pressure on the yen at the moment, and most crosses are sort of performing really well against it.
Yeah, the BOJ has said they're looking to be more tactical with any intervention, so I think it sounds like all the hedge funds are not really believing them that they're going to come in and get wiped out, basically.
Yeah, it looks like all the traditional lines in the sand have sort of been crossed and no action's been taken, and despite the ambush approach the BOJ is saying they'll take, it's like you said, not having much effect.
Taking it as a green light.
Yep.
Yeah. Cool, and the RBA expecting to raise by 25 basis points. What's sort of driving that?
RBNZ.
Yeah. Sorry, RBNZ, sorry.
Across the ditch for their lesser cousins.
Yeah.
So they're looking to raise 25 basis points to 2.5% today. That sort of follows the hawkish narrative the RBNZ has had for the last few months. So that was sort of the first to lead the charge with that tone. What this basically means is the markets will have priced this in. They expect the hawkish tone to remain. They expect rates to sort of have a few more rate rises over the next couple of quarters into early next year. So they're expecting, I think, another 2 after this point. What will move markets is if the decision misses that, or more importantly, if the policy outlook doesn't support further tightening down the track. So that's what investors will be mainly watching.
And they're still at a pretty low rate as well, so gains probably likely to be relatively capped at some point. Yeah, depending on how hawkish they are.
Definitely.
And the minutes from the Fed will be released tonight. Anything in particular we're looking for this one?
Basically, the key thing is Kevin Warsh, since he stepped into the chair role, has been reluctant to provide any forward guidance on what the Fed's viewing as how they might move in future periods, keeping his cards pretty close to his chest. The minutes will probably give a few more clues as to what the broader committee thinks regarding this. So investors have got to really pick over this with a fine-tooth comb and see what nuggets they can pull out of it.
Yeah, cool. And the big movers for the day. Looks like pound yen had a bit of a movement upwards.
Yeah, so when we're talking about the yen weakness, this is across a lot of crosses. So you can see the pound sort of gain strength against it. Pound also in a strong position. I think it was the second highest rising G10 currency over the last sort of period behind the Aussie dollar. And that's primarily off the back of Keir Starmer getting turfed out as UK PM. Markets are sort of putting support behind the front runner, Andy Barnum. They sort of think he's got a tight fiscal outlook, and so are pretty happy with where things are sitting there. So the pound's getting a bit of strength.
Cool. And the S&P 500.
Yeah,
What's
so
driving that?
You can see the jitters last week from the non-farm payrolls on Thursday. That was the huge volatility on the left side of the chart. And that sort of balanced out yesterday as the tech sectors rose, big companies rose, and that pulled up the index as a whole.
And VIX waning a bit?
Yeah, one goes up, the other comes down. So with the S&P rising, the VIX, which is the forward-looking sort of uncertainty based on the S&P options pricing, when that rises, the VIX will come down, and we can see it's now below 17. We know 20 is sort of the inflection point between stability and uncertainty. And so the markets are right now pretty happy with where the geopolitical situation is sitting, where the US economy as a whole is sitting. And so optimism is pretty positive.
Yeah, cool. And the biggest volatility changes, obviously not the VIX in this one, but Bitcoin. Bit of an up and down, this looks like.
Saw a massive change yesterday. I mean, it finished relatively flat, but there was a lot of intraday movements. This was largely from MicroStrategy, which is one of the largest Bitcoin holders in the world. They liquidated about 3,500 coins to pay preferential dividends. Obviously, that's a large holding that's going to move the markets, but we can see that was sort of quickly snapped back up to finish relatively flat for the day.
Hasn't been any movements out of MicroStrategy or anything like that? Any fund withdrawals?
I don't believe so. I think it was just they've got a new strategy where they pay certain dividends first before others, and the new strategy is liquidating those coins to fund that process.
Cool. Nice. And the chart of the day in Nasdaq.
Yeah, we can just just talk about how the Nasdaq and tech stocks as a whole have been rising the last few weeks. We can see it sort of in June and into July, it's sort of flattened out a little bit after those steep rises we've had. So we're kind of at an inflection point where investors are seeing whether there'll be a bit of a pullback and a sort of healthy correction, or whether it's sort of just a holding point before it sort of takes off again. So we're kind of in that point where it could go either way. But I think, as we've seen, markets are sort of pretty optimistic with how everyone's travelling at the moment.
Yeah, cool. And article of the day is about defence spending from Trump.
Yeah.
Good one?
Yeah. So, interesting one just for the geopolitical landscape as a whole. Trump's been really hot on companies increasing their defensive spend. A lot of the NATO nations have sort of played along so far and committed to increasing the portion of GDP going to spending. What they're saying is this latest round of NATO talks, which will be happening, I think, this week, it sort of goes from commitments to spend to how you actually got to implement that. So brings it a bit more into reality.
Yeah, he's got a fair bit of ammunition to talk about with China, doing some testing in the Pacific as well yesterday. So
yeah,
it's probably got a fair bit of work to do there.
Yep.
That's it, guys. Any questions? Open up to the floor.
Microsoft, the layoffs in the Xbox division. Is that people are just getting out of the box technology? Online gaming is now the way. You don't need an Xbox or a PlayStation box anymore.
Yeah, it's been interesting. I know they were increasing the price of their physical units the other week. So obviously they're increasing their margins there, room to pull back elsewhere. And then I think PlayStation came out the other week, said they're no longer producing physical game discs. You're just downloading off the internet. So I think we are starting to see the shift of the traditional hardware technology into a more digitalised version. And I think that's sort of indicative of what's happening across their broader business as a whole.
Thanks, guys.
Thank you.